Hey folks, I hope you're doing fine. I'm Simo from Investment Research, and as I expected at the market open, SoFi was down almost 2.53% from the previous close. Today, November 17th, 2025, I have some important questions every SoFi investor is probably asking right now. Before we start, make sure to subscribe if it's possible. Okay, so why did SoFi fall from almost $32 to $27? What are the current institutional ratings and forecasts? And where is this stock headed this week? So let me walk you through my complete research in this video. And just by the way, and one person in the comments section said I'm conservative in my point of view. That's because I base my recommendations on financial proof and market data, not sentiment. But I don't judge. Everyone has their own perception, and I respect that. Alright, so let me start with what everyone's asking. Why did SoFi drop nearly 15% from the November 12th all-time high of $32.73 down to Friday's close at $27.82? This was mainly due to huge volume, with Connor Clark and Lunn Investment Management Limited selling 1,475,180 shares of SoFi Technologies. So when such volume is traded by institutions, the market value is impacted and retail investors tend to panic a bit. From my research over the weekend, according to technical analysis data, a sell signal was issued from a pivot top point on Wednesday, November 12th, 2025, and so far the stock has fallen 13.63%. This was not a fundamental break, this was classic technical profit taking after hitting all-time highs. From what I've been studying in the charts, SoFi holds several negative signals right now despite the positive long-term trend. According to the analysis, the stock holds sell signals from both short and long-term moving averages, giving a more negative forecast for the near term. Moreover, according to volume data, Friday, November 14th saw the price decline 2.01% from $28.39 to $27.82, and volume fell by 29 million shares alongside the price drop. When volume falls with price, that actually reduces overall risk because it suggests selling pressure is exhausting. According to my weekend analysis, the stock fluctuated 9.57% on Friday between a low of $26.53 and a high of $29.07. That kind of intraday volatility tells me we are in a consolidation phase where neither bulls nor bears have full control. From the technical picture, SoFi finds support from accumulated volume at 27.14. According to technical analysts, this level may hold a buying opportunity as an upward reaction can be expected when support is tested. According to the 3-month moving average convergence-divergence, there is currently a sell signal. On corrections upward, there will be resistance from lines at $29.33 and $28.36. According to the analysis, a break above either of these levels will issue buy signals. From my assessment, we are right at that critical $27 to $28 support zone, where the stock either bounces or breaks down further toward $25 to $26. Now let me walk you through what Wall Street institutions are saying, because from my research, the analyst community is deeply divided on SoFi at these levels. According to the latest consensus data, 17 analysts cover the stock with an average rating of hold. Their compiled forecasts put the 12-month stock price target at $24.90, which implies 10.5% downside from Friday's close of $27.82. According to a broader sample from 24/7 Wall Street, only 6 out of 22 analysts rate SoFi as a buy. That is just 27% with buy ratings, which is quite low. The Wall Street consensus 1-year price target they compiled is about 26/61, again below the current trading level. However, 24/7 Wall Street's own analysis, published November 14th, is slightly more bullish, with a 12-month target around $29.41, about 6% above Friday's close. Let me break down some specific institutional ratings from my weekend research. Institutions that have been adding include the Police and Firemen's Retirement System of New Jersey, which increased its position by 4.9% in Q2. Brighton Jones LLC, Exponents Inc., Ballantine Partners, the New York State Common Retirement Fund, and CWM LLC all boosted their holdings according to recent 13F filings. Moreover, institutional investors now own roughly 38% of SoFi's float. However, Cathie Wood's ARK Invest trimmed its SoFi position on November 12th alongside Tesla. And when a high-profile growth investor takes profits, that creates near-term selling pressure. SoFi CFO Christopher Lapointe also entered a prepaid variable forward contract on November 12th covering 500,000 shares, receiving $11,077 million upfront with settlement in 2027. These moves sometimes concern retail investors, even though they are often personal financial planning decisions. Now let me get into the forecasts, because from my research, this is where it gets really interesting. According to the predicted fair opening price model for Monday, November 17th, SoFi opened at $27.81, essentially flat from Friday's close. The model suggests a move of just 0.0479%, which tells me the market expected range-bound trading to start the week. For the longer-term institutional forecast picture, 24/7 Wall Saints model published this weekend sees SoFi reaching $55.30 per share by 2030. That would represent almost 100% upside from current levels, or about 14.8% annualized returns over 5 years. Their model assumes 10% year-over-year revenue growth and a 3.5 times price-to-sales multiple, which is actually conservative given SoFi is growing revenue at 38% year-over-year. According to various forecasting models I studied, near-term predictions show a range between $22.79 and $31.22 for November, with an average around $28.65. More bullish models show potential for a $30 to $36 range in December as the consolidation phase completes. From my own modeling, if SoFi maintains 30 to 35% revenue growth through 2026 and expands EBITDA margins from the current 16.72% toward 25 to 30%, the fundamental value supports $32 to $38 over the next 12 months. With the crypto launch catalyst, stablecoin roadmap, and blockchain remittance expansion, there is legitimate upside to above $40 if execution continues. Let me give you my specific outlook for this week starting Monday, November 17th. From my technical analysis, the key level to watch is 27.14 support. If this level holds with strong volume on Monday, we could see a bounce toward $28.50 to $29.00. If $27 breaks, we are likely heading to test $25 to $26 before finding the next support. From the fundamental side, nothing has changed with the business. According to Q3 results, SoFi posted $962 million revenue, up 38% year over year, $139 million net income, which marked the 8th consecutive profitable quarter, and management raised full-year guidance. The crypto launch on November 11th positions them as the first nationally chartered bank offering consumer crypto trading, and these fundamentals remain strong. The next major catalyst is Q4 earnings expected in late January or early February 2026. Between now and then, key data points to monitor include crypto product adoption metrics, any announcements about the SoFi USD stablecoin launch, the Lightspark blockchain remittance rollout in Mexico, and continued member and product growth trends. From my analysis, here's how I am approaching SoFi this week. For traders, if the stock opened Monday around $27.80 and holds above $27.14, that is a potential long entry targeting $29 to $30 with a stop loss at $26.80. If we gap down below $27, I am waiting for a test of $25 to $26 before considering entry. For long-term investors, current levels around $27 to $28 represent a reasonable accumulation zone. The 15% pullback from $32 has reset the technical picture and removed froth. The fundamental story supports $32 to $38 over the next 12 months, so buying at $27 to $28 provides a margin of safety. The key is not trying to catch the exact bottom, but accumulating quality businesses when they pull back. SoFi at $30 was stretched. SoFi at $27 to $28 after consolidation is more attractive. Institutional buying patterns show big pension funds and wealth managers are still adding at these levels. Why did SoFi fall? Technical sell signals from the 32-hour pivot top, Cathie Wood profit taking, the CFO insider transaction, and broader tech sector rotation, not fundamental deterioration. What are institutional ratings? Divided, with average consensus at hold and 24.90 to 26.61 targets, though more bullish analysts see $29 to $38. What is the forecast? Near-term consolidation between $25 and $30 and longer-term 2030 targets between $40 and $55 if execution continues. From everything I analyzed over the weekend, SoFi remains a high-quality fintech executing well. The pullback creates opportunity for patient investors. Short-term traders should wait for clear technical signals. Long-term investors can accumulate at $27 to $28 with confidence in the 3 to 5 year story. As always, do your own research, understand your risk tolerance, and never invest more than you can afford to lose. Thanks for watching, and I will see you in the next analysis.